Hey traders, in this video I want to talk to you about multiple time frame analysis. In short, we're going to use a few different time frames, and we're going to go ahead and weed out some bad trades, or should we say, we're going to keep you on the right side of the market. A lot of problems that we see with traders is they get jumpy. They start pulling the trigger without really a reason to, and that usually means they're looking at very small time frames. They don't understand the overall picture that's happening in there, that's unfolding in the market. They could be taking a lot of short side trades or counter trend trades, even though you may have a short time frame showing a downtrend, but the path of least resistance may be to the upside. So using multiple time frames, we're able to ferret out better trades, higher probability trades, and stay on the right side of the market. And I'm just going to say right now, by far, the path of least resistance is where the trends are. And if everybody says, well, there's a trend on all time frames, well, you're absolutely correct. But I'm talking about trends where we're going to use a top-down approach, where we use a very high time frame, and we're going to see where most of the money is been going, okay, and where we say the smart money, if you will. I wouldn't call it smart because I've seen some dumb moves with big money, but listen, when a lot of people are going that direction, I want to go that or be on that move on a higher time frame. Okay, I don't want to fight it. If I'm fighting the trend, I'm losing money. And the idea in trading is it's not that you're not going to lose money, because you're going to take some losses. What you're going to do is you're going to try to catch good long trades that are going to allow you to take advantage of the moves when they happen. So let's go ahead and start here. I've got 3 time frames. I like to use 3 time frames. I got a weekly, I've got a 240, 240 minute, and a 10-minute chart. Now this is my favorite setup that I like to use for an intraday basis. Now if I'm going to go to a swing trade where I'm looking for longer moves, I'm going to definitely use a weekly. I may even go to a monthly on that. I would use a daily, and then I would go to probably a 30-minute is my favorite entry on the swing side of things. May even go down to a 10-minute for an entry, but very seldom do I do that. On a intraday, and we'll use this as the intraday, we'll use a 10-minute. You could go to a 5-minute, but it's going to get a bit noisy. People go, wow, you're using a weekly chart on an intraday? Well, yes, I am, and I'll tell you why. First of all, I'm not going to trade 20 times in a day. I just not going to do that. I made that mistake when I was a rookie, and I'm sure a lot of you have if you're new to the game of trading. I'm looking for maybe 1 or 2 trades a day, and that would be actually on multiple markets, just not on one product. And you can see here we have the ES, which is everybody's baby and go-to product, and we're doing the March contract. Not that that matters, but anyway. So let's start with the higher time frames. Let's blow this up. I got a weekly chart here. A couple things. You'll notice that my chart is really clean. Okay, now I don't have lines going all over the place and 50 million EMAs on there and 10 different indicators. The idea about trading is to keep it simple, and you would be amazed at how simple, if you kept it that way, how simple your trading ideas, your also how clear your head would be, and most likely how well you would do in the trading arena, because you can see it and decipher a little bit better. And to make my point, I'm in a weekly chart here. And we go back, and I could load some more data on here, but this goes back into 2009. You can see here from, actually before this, but since 2000 and well, at least April of 2009, we have been in this massive uptrend. Okay, for one, you see that we have this EMA here, which is an 89 period EMA. All right, and price has been floating pretty much above it the whole time. The angle of this has been pretty nice between probably 2 and 3 o'clock. We did lose a little bit of the 89 minute moving average here, or 89 period moving average for a little while, but we actually recovered. And let's say I took a position back in here once we broke up above the 798 and just stayed in it and just trailed the stop on all these little lower highs every time we broke a new high. I would still be in this trade right now. Okay, and I would obviously be doing very well. Okay, now in hindsight, nobody's probably going to stay in the trade that long unless you've got a outlook of 10 or 15 years maybe, and you're not going to look at it but once every couple of times a year. I wouldn't call that very smart trading. I wouldn't do that personally. But my point here is that, listen, we're in an uptrend. Stay on the good side of the market. Now, of course, somebody could have said, well, look here, you had this great move, from, let's say 1333 down to 1038. Yeah, that's huge. That's over 300 ES points. That's monstrous. And yes, you could have caught some of that. All right. But the overall trend, until it took out some of these swing lows down here in the 967, is still to the upside. And we have to always remember that. All right, so now right up here where we are up here today, up around the 15, let's see, what is that high up there, 1512 area, we are in an uptrend. Now I'm going to ignore the fact that we are getting overextended. I'm just trying to make the point of how you analyze this. Now, we know we're on the upside on a longer time frame, so we're going to favor the long side of the trade. We go to a 240-minute chart, which is a simple 4-hour chart, and you can see here it's the same thing, that we've got an EMA that is pointing up and at a nice angle. Price has been trading above it for quite some time. And I forgot to mention, I do use the CCIs. I use it as visual most importantly. It helps me with the visualization of what the market is doing quickly. So if I look at the CCI, what am I thinking? It's above the zero line, momentum's up. This is a trend up to the upside. I don't want to be fighting this trend. Now we did have a little, and that's been since my goodness, that's been since the 1st of January. And we had a little pullback. They tried to break this thing down, but you can see it was short-lived. So anybody who was hopping on this early trying to get short just absolutely got wiped out again. So again, on the intermediate time frame, we are looking to the upside. Now we can go down and start, now that we have the upside covered, and we know that the longer time frame, weekly, and the 240-minute is to the upside. Now I want to go to a smaller time frame and look for entries on this. Now, entries can look in a lot of different ways. You can go to even a smaller time frame. If you really want to go one more step, I'll give you if you're really wanting to time this thing down, and it depends. This depends on your style, because I can sit here and go through all kinds of different entries, but it really will depend on your style. If you don't mind setting your stops a little bit wider for this type of trade, then you see here we're pretty flat on a 10-minute chart here on the EMA, and you can see at one point this thing broke down in here, and this was a pretty good nice move in here. Let me get my tracker on here. We have a nice move from 1508 down to 1494. That's tradable. All right, but the key here is that my analysis said that I want to stay long, so I ignore all this. And then people say, well, you gave up a lot of money. Yeah, I did, and then I could have made some money in this, but the point is that wasn't the side of the market I'm looking for. I'm looking for the upside, because that's where the path of least resistance was. And you can see here it sold off and recovered quickly. Okay, so the buyers are not ready to give this market up yet. So once this happened and it retook the 89 period moving average, you could have possibly started to establish a position, or you could have started to draw some lines here and say, okay, we have some support down here. Looks like we have some resistance right in here. We're wedging, so maybe I look for a breakout of this wedge and a close above here. So the 507, maybe you could say is 508, and then a stop below here. And then, same thing that's happening right now. You could say that we are sort of channeling here. A break of this channel could be an entry for you. Let's go down to a smaller time frame. I don't like to go below a 5 because it does get noisy and you will get stopped out quite a bit. So let me get a 5-minute here once my data pulls up. Okay, so we have a 5-minute here now. You can see a little bit better, maybe some patterns that you may use. I do like to look at the CCI. You can see here the CCI did cross above 0 right in this area. I wouldn't have taken the trade. I would have waited till this price starts to congregate over the 89, then might start to establish a position in here. That's another good way of doing it. Again, there's lots of different entries. The bottom line here is that we're going to eliminate one side of the market. We're going to keep this as simple as possible. And the reason is we want to keep it simple because when you keep it simple, you can see things a lot easier, and it's going to keep you patient. Okay, through all this mess, your heart was probably racing, thinking, "Oh my gosh, I could have made this much money." But the bottom line is, you could have also lost that kind of money. All right. What if that would have reversed right away, which it did reverse, and it would have wiped you out, and you're holding this position? You're fighting these two time frames. Don't fight the higher time frames. They are the kings. All right. These are just the entry time frames down here at the last one. Now let's go look at this in another market. Let's go out to gold. Gold is another favorite. There's a lot of gold bugs out there, and everybody's saying that gold's doing this and that and everything else. So let's go take a look and let's see what the charts are telling us. All right. So we come over here and let's blow up the weekly. Well, I would say we're in an uptrend, okay? Especially since, again, I could load some more data, but since 2009, this thing's been up. And now we've been sort of going back and forth and back and forth and back and forth. We've been below the CCI, above it. We have not been below the 89 period moving average. This thing still is fairly bullish in here, but is it ripe for a trade? Is it really giving me the path of least resistance, and is it giving me an area to get involved where, you know what, I don't have to fight much to make money in this thing? Because let's face it, Jim Rogers said it best when he wants to go around and find the big bags of money where all he has to do is reach down and pick it up. And that's what he's doing, is being patient. And if you're patient enough in the market, there will be ample opportunity for you to do that. And you can see here on the intermediate time frame, this thing is just chopping through this 89 period moving average. So I don't want to get close to this. Okay, I would need to see a break of maybe a trend line here, up or down, and right now it would have to be up, because I'm actually ignoring the downside of the market right here in gold. So I would need to see a move above the 86, 85 area before I'd even start sniffing this market. These guys who are in here jumping in early, just getting chopped up. There's guys I'm sure that were in here trying to jump the gun when this started to get closer to the channel up here. All right, on the lower time frame, this is interesting. Our longer time frame still is bullish, our medium time frame sideways, but our shorter time frame is down. Okay, we got three different signals, three different time frames telling us three different things. Guys, that's saying stay away. This market, I don't want anything to do with this market. I'll wait till it sets up. I'll be patient and put my money to work in another place. So let's go look at the euro as the last one, and we'll wrap this up. And I hope you can see by doing this, is what I'm trying to tell you is that, listen, you don't want to go willy-nilly with your money out there. You want to put it to work where you think you're going to get the best results. And using a couple time frames, or three of them I prefer, you can always definitely help yourself out. Now on this one, on a weekly, you can see here the euro was obviously in a downtrend for quite some time here, but now we've broken back above the EMA here, and we actually had good momentum. So, and we're pulling back now, which I'm not too concerned, but right now I'm going to favor the upside. We've also broke some major support or resistance as well. Now, funny, on the 240-minute chart, we have actually broken below that. So we're above and below, which is a mixed signal. But if you go back, you can see here this broke back above, and this was an easy trade up from here. Boy, that was easy money in there. Now also, you go to a 10-minute chart, and we've also broken below the 10-minute chart. And somebody's going to say, well, wow, that's a lot of money right in here. You're right, it is a lot of money. But you know what? This was trading above it, and then it broke below it and kept going. You would have to be very lucky to catch that trade in there, okay? Unless you're using another system or way of doing it. So on this one, I'm going to favor the upside right now in the euro. Okay, until we break back below this, or we lose momentum and momentum rolls over on the weekly, and until this market recovers the 89 here and starts to trend up, I won't get in. I'll wait for that to happen on the 10 minutes. So I hope you can see how this can help you eliminate some of the bad trades, and when the market isn't really telling you what it's doing, when signals are mixed, what it's saying is that, you know what, we may have a shift in balance here from buyers to sellers to buyers, or they may be resting, and we'll wait. We're not going to get involved and try to guess the market. So I hope that helps. If you have any questions, go ahead and put them in the comments box below. We'll go ahead and answer them. If you have any, want to watch more of these types of videos, go over to www.misstrade.info, and hope your trading is well. Take care. Thanks.